There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians and traders, investors, portfolio strategists, and bears to the 24th of September weekend software strategy and occasional ramblings, macroeconomic view, and all of the like. For those of you that do not know, my name is Steve Vetterl. I am the CMA of Auvoria Prime. I'm also one of the managing partners of First Down Financial. We are a brokerage firm and an investment advisory advisor in Orlando, Florida, nationwide, which has been going quite well. It's been taking up a lot of my time. So I try to do these market calls, and forgive me, I've got the bad microphone today, so if there's echo and all that inside this large cavernous kitchen here, I apologize. Coming to you from the kitchen island of the Vetterl home this morning. But I wanted to do this broadcast as I try and do a little bit after 10 a.m. on Saturday Eastern Time, and Tuesday as well around 1 p.m. As many of you may know, been in a hell of a sell-off, and as much as I try not to talk about the Dow Jones Industrial Average, but the DJIA essentially dropped below 30,000. It's been its lowest mark since September of 2020. I'm going to show the charts here in a bit once I go through some of these news stories next week. But the NASDAQ and S&P, which are much more proper benchmarks, in my opinion, are testing their June lows. So, are sort of where a reckoning of sorts is taking place. But a lot of the pundits saying a break below those levels would be another bearish sign for the stock market. I kind of chuckle at that, as I've been saying we've been bearish for 6 months. So we've been in a dead cat bounce based environment. Every time you see some ripper of a rally, which typically runs about 10%, by the way, there's much more grandiose sell-off as we're seeing. So we'll go through that. Obviously, in Forex land, anybody trading, at least in the majors, currency pairs, it's been one single show with one single spotlight. That has been the U.S. dollar's strength, right? Almost everything else on this planet, maybe including real estate in certain areas, have been going down, and the dollar's been going up. So the breakdown or the uncorrelation that has taken place among almost every asset class, with the exception of a few commodities, and the U.S. dollar has been nothing short of breathtaking. And for those of you that have been following this podcast, I try to cut through the crap and not bring any fluff to the discussion. We've been talking about this from a risk management standpoint for 8 months. And I think what has probably surprised a lot of investors is the magnitude of which these things can unfold, as I've talked significantly about in previous casts of what's called a stair-step up, elevator down concept, at least in the equity markets. The other really surprising thing that I pointed out a couple of weeks ago, and you can dial this up, I actually don't have a chart to illustrate this, but it's just been an overwhelming, actually I think I may have posted something on Twitter about that, but there is an absolute overwhelming majority of, let's see if I can find it here. And by the way, for you, if you don't know what this is Twitter. My handle is at FXES Trader. This is more of a research archive for me, if you will. So I follow a lot of really good people. Sentiment Trader Charlie Bilello is an example. The majority of the people that I follow, they just post stuff that's important to understanding risk, trading, portfolio management, asset class, right? All the stuff that's related to that. And if you look at the following chart, which doesn't look like I have the ability, there we go. There, and this is a bit dated, so take it with a grain of salt, but institutional traders, what's called net spec charts. These are what's often called COT charts. These are commitments of traders. Many of these are released in aggregate, not necessarily in chart form, but they can be released in other types of charting patterns like a scattergram or whatever. The real key thing just to understand of all this is that large institutions have put in absolute earth-shattering amounts of protection in the portfolios, whether it's in the form of buying a tremendous amount of put options against the market or equities or indexes. There just has been huge amounts of net spec and 3x. So whether this is a complete overreaction or the institutional market protecting, in many cases, what is a way too levered equity only long portfolio with just a ridiculous amount of put options. It's what's called a collar. As a trade perspective, the key really is that understanding what's going on as far as the marketplace and how that plays out in terms of risk is really, it's a big deal. There's just a lot of net speculation going on in the market. So what we're trying to understand here is how this all can essentially affect any portfolio, any trading, any what have you. I've, been out here almost to a fault on the mic, just saying, hey, if you're heavy in equities, which is something we were sounding the alarm on heavily, both on Twitter and in these casts, in your equity portfolios, you really should consider lightening up on some of these bounces. Especially since it could take a long time to get back. And I think what a lot of investors, just from the most simplest compounding understanding, is if you lose 50% of your portfolio, it's get 100% return just to get back to flat, right? And the more your portfolio or your positions, trades in particular, in any class really, go down in relation to what's called your cost basis or your purchasing price, you have that much more ground that has to be made up from that loss. So just understand the amount of movement that needs to take place out of that. And, this really isn't a focused discussion on any particular area. I think in terms of gold breaking down and a lot of the stuff that I've retweeted here has been actually pretty good, including lots of long EV lines to charge your car. Dan Niles, let me just note this as well. So this guy's probably one of the wealthiest that I follow that is very generous on Twitter, not necessarily as much talking up his book, but just explaining why he's doing a particular thing. So there's a lot to be learned from individuals like Dan or another big hedge fund guy I follow. J. Kyle Bass, you can see here talking about what's going on. This is just, I always advocate to clients, students, everybody that, you got to follow people that are smarter than you, right? And you got to put, their research, especially if it's super quality-based stuff, put it in perspective of what you're researching. And, who knows, for really no other reason, it could be just a checks and balances that you're on the right path, right? The only thing I would just sort of caution everybody on that is that oftentimes one of the more powerful things in human psychology and psyche is seeking out those that can justify a particular opinion you have, right? That can be especially dangerous in investing. And it is one of the worst traits and one of the baddest paths, if you will, to follow or go down. So trying to stay away from that. And that's why I talk so much about who I follow. It's almost like, hey, Steve, well, you're just pointing out guys that are a lot smarter than you and you're putting them all in the aggregate. Yup, exactly. Because they help me stay on track if I'm off key or I'm thinking about something differently, right? Great example. You had last week, and I'll just put up the Forex calendar so you can see next week's calendar of just red folder events while I'm just my last sort of monologue piece here. Notice how in the Fed meeting this last week, they were, just all asking questions about inflation and stuff like that. Chairman Powell, God love the guy, but it's just shocking to me that he spent way too much time on lagging indicators. Why would you look at the last 3 months of CPI and put, a huge percentage into your movement, if you will, as him and the 12 regional federal governors did? They comprise essentially the FOMC, the Federal Open Market Committee. Why on earth would you put most of your decision making on something that's a lagging indicator, right? How about the fact that there has been new jobs created, right, through really no fault of the current administration, just because there's demand for employment, and how that could totally affect GDP positively? You're like, nobody asked me that question. Somebody gave me the microphone. I just feel like, hey, Steve Vetterl, I think you guys are doing a really rotten job, but I'm an investment manager with First Down here in Orlando, and I got a question which is probably going to piss everybody off here. And then I would just ask away, look, like, why are you wasting your time on all these lagging indicators? These guys are smarter than this. So, I should say let our hearts not be troubled, but I may have to retract that statement at some point because it's looked pretty ugly out there. And a great example of true ugliness is look what happened to the British pound last week, guys. So let's take a closer look at maybe ironing out some of these unknowns if we can possibly. But just note that Chair Powell is speaking next week. Most of these are just comments he's making. Although I think it'd probably be interesting for those that are big into crypto out there. He's talking in front of Bank of France committee on digital currencies. So, let this sort of be like an outside. This is not going to affect U.S. interest rates, but maybe he's changed his tune on crypto, right? Or maybe he's just going to be a talking head about it. But so Christine Lagarde speaking next week. Just note that that's going to be important. Will she start continuing to echo more of what the Fed and the governors have been saying? Question mark, right? So that's going to be important. And obviously then on Wednesday, I think this will carry some importance, but typically when you're, making open remarks of, any kind of research conference, it's all scripted stuff. So, it's not like somebody can get them off the rails. Like plenty of journalists, financial journalists, but journalists last week were not able to with Chairman Powell. So, and then going into Friday, got a bank holiday up in Canada. Looks like daylight savings time shift. Seems pretty early for that, right? I guess not in the down under. So they will be shifting time. Note that if you are down in Aussie land. All right, so let's take a look at the charts here. What you're looking at is a one-day chart. Each candle represents a single day. We are completely compressed on this But I did want you guys to see this is essentially all data going back since the 15th of July of 20. Actually, you know what? I probably should. Can't see me. Yeah. Ooh, oh my God. I almost got that perfect. Look at that. So this includes, I guess you could probably argue we need to see all of that drop data, right? Yeah. I always try to put, you can do this for anything where you can get good, solid, aggregated volume at execution type data. Primarily, we're looking at it on indexes. That's where I prefer to start sort of my macro research from a market profile standpoint. See this right here, this area? It's really not only the top of the markets in February of 20. This is before the pandemic took hold, right? And then we bounced up to this point. Notice how it was also a point. This is almost 100 points in the S&P, but it was our zone, if you will, that was providing support. This is more than likely where we're headed. Okay. So I know it's hard to see, and I've got everything really compressed, but I do this because I want you guys to see the data, which is these blue lines here on the left of the screen. This is an aggregated volume-based data. Remember, I put a significant amount of weight into this as an indicator, much more so than a lot of the other stuff. Now, you can trade off of these levels if you knew what you're doing, right? You can drill them down into small time frames all the way up to something real large and macro like this. But I just used this as a point, if you will, of magnetism, more than likely where we're probably headed. So this is the 3,400-ish area, probably all the way down to 3,250. So if you're trading anything that is index-based S&P or Dow or NASDAQ, I would start the research from this index standpoint, and just know that wherever this particular point is on the other charts, which is almost a center line, if you can see, of this tight zone. So here's the top of the zone. Here's the bottom of the zone. We spent a lot of time going in trading in here. This is probably going to be the first point, because you notice this is where we took off. Right? We broke out of this zone. This is where the Fed, many central banks in developed markets were very, very accommodating, right? They're buying a lot of assets, right? Putting cash back in. Remember that circle of children with apples I use as the example. So in this case, they were the parents sitting outside of the circle taking all the apples away from the kids. But they were putting cash in the middle of the circle for the kids to grab and do stuff with, right? So maybe there's an augmented example of that. But this whole accommodative nature, really put us in a bubble-licious top. And as we came in and then we, sort of had our first pullback and right back up to that area, this is where we became bearish at first down. So we've been talking a lot about this publicly and in our different casts and posts and stuff like that and blogs. But you were offered an opportunity to get out at this point. Not sure everybody took it. I think there's an inordinate amount of still ridiculous leverage, even now, hence why some of those extreme positions are being taken in mass. But the other thing to note on this is the bottom of the value area of this entire range. So this whole 3,350 or 3,300 zone, right? Could have a 100-point range on this. Is a zone that's more than likely going to be an attractor for price. Now, just understand, oftentimes what happens, we're not going right to this point just yet. Oh, we could. Certainly enough puts that have been bought out there as far as bearish nature, but usually when you have such an overreaction, like you're seeing in terms of protective collar-based positions being put on, right? Look at this as like if you had, I don't know, a real expensive car, right? Maybe you spent $2 or $3 grand a year to insure it. So in case the car gets wrecked, your insurance essentially steps up to replace the car, right? doesn't quite work as perfectly like that in collaring a position land as far as a trader. But many of those $2,000 to $3,000 investments in the market just went boom. And a big crash can turn into 40 or 50 grand, right? Thus protecting an asset that more than likely will drop, maybe by 30%, right? So that's the best way to explain it in just real simplistic form. It's using the options market to bring a collar to a portfolio or a particular group of stocks or indexes. You always look at these levels. But the bottom of the market, when we're hanging on the edge of the cliff right here. Make this bigger. So we're hanging right on the edge of the cliff right here. From the low, we went down and touched it. But from a long-term volume perspective, I still think we've got easily another 300 points to the downside. But interesting also that even though we've had extreme downness, still haven't touched the Bollingers. See that? So there certainly could be room for more extreme outs. These are always the funnest places to trade if you know what you're doing. But this could be the most scary because it's basically trying to paddle a kayak in a tidal wave, right? I may be aching to the people that really know what they're doing. You ever seen the surfers off the coast of Bolivia, where they have those 100-foot waves? Somewhere in South America, I forget. It's on the western coast. Guatemala, is that right? Maybe it's off the coast of Guatemala where they have those huge waves. Sometimes you see those guys get out there, which is just bananas nuts, in my opinion. And they'll try and surf a 100-foot wave, and the guy will just ride the whole thing for like a mile, right? There's all kinds of videos on YouTube about that. Maybe not the best analogy, but it's kind of fun trying to come up with analogies of risk, right? In any case, that's where we're looking at in the S&P. I know I talked a bit too much about this, but more and more I'm seeing a lot of traders moving into trading indices, whether it be MT4 or some other trading type, or just the individual equity markets. NASDAQ, let me show you this as well. Actually, let me show you the Qs. Just get more in tune to showing you guys that without getting into the confusing detail of the NASDAQ index itself. So this is the bottom of the value area right here. I would imagine this will be resistance for us, probably going back up. And eventually headed much further south. I don't normally do this, but since I started off the call with this today, I think it'd be important to show this. I absolutely hate this index. It is not efficient. It's price weighted. It is not capitalization weighted. All kinds of inefficiencies in 30 stocks, right? Mostly from a risk standpoint, it's not a broad enough measure. My clients are always sick of hearing me talk about that because they'll call me up. They'll make the mistake. I'll catch them. Hey, Steve, did you see what happened to the Dow? I'm like, nope. What's the Dow? And they're like, oh, yeah, right. That's right. Look, here's what happened to the S&P. Now, what's that? In any case. This is a big down, but it also had a big rip back because it was totally overblown. That still isn't touching the Bollinger Bands, even on a daily chart. Now, this one you do not have volume weighted. You would have to look at some sort of ETF that trades just a Dow that has a lot of volume to get any sort of idea, but it would not be an accurate comparison. It would be sort of an uncorrelated comparison. That's why I don't show it. But there you go. Let's go to the dollar. I think everybody on the planet that's a trader has seen the nuttiness that is going on here. Let me just open this up. So dollar. So as I'd said, we get above this level. We have a small pullback. Right? It's a very sloppy pattern. There's really nothing I can correlate this pattern to, but for ages and ages, I have always been remind myself of the most important factor I've ever heard in trading from a risk management standpoint is that markets can be irrational considerably longer than you can stay liquid, right? What's that mean? It means don't chase craziness and try to step in front of the freight train, right? Go with the flow. That trend is up until further notice. Although further notice could be now. This is the closest. This is 28th of April. We've actually touched the upper Bollinger Band. I would expect us to if you're following these dotted lines, something happened to my crosshairs. Okay. I don't really use this software to trade, so sometimes I'm at a loss for using it. I like it just for presentations. Let's take a look at the dollar. So we're probably going to spend some time in the upper range. This is the euro for now. We are now formally and officially underneath par. Never thought I'd ever see that. From a long-term perspective, we have to take a look at the monthly. Let's reset scale. My computer's fan has gone way up in speed, and that tells me that we're downloading something. It'd be my luck it's another Windows update for .NET 3.5 framework. All that BS, it's just constantly updating. In any case, let's look at all time. So here's the low. I would think this would be an absolute extreme position for not only the dollar to be roaring up to, but this to be falling into. We have not seen the levels that we're at in over 20 years on either the dollar, the euro, pound. I mean, the list goes on and on, right? I can't even find a support low. It's probably a half-assed attempt at it at best. 96, 63. No man's land, folks. It's tough. Take a look at this move. This is crazy. Look at this. It is a big move for one day of the pound. Isn't that crazy? This is a monthly chart. Look at this. If you drop this back to daily, expand out the same. Let's reset the scale. Look at that move. Talk about absolutely clearing the queue. I'm not sure if anybody's ever heard me say that before, but clearing the queue means that like every single trade that was sitting on the books, like some sort of market or some sort of limit order, where you can just have it sit out there forever in the queue to the downside, was actually hit on Friday. pretty sure on this move, somebody blew up a chunk of their portfolio. Probably going to take a while for these institutions to, what I like to call, shake it out of the weeds, you know? But this is a really, really big move. This move is so big that, hey, Steve, how big is it? This move is so extreme that it is almost maybe one of the few times in my entire life that's worth stepping in front of, right? That's like a totally stupid statement to make generally, right? But look how far this move is. This is just almost worth going long. Don't know that I would do this in the currency markets, though. I would only go long this via an ETF that trades just the pound. They're out there. And that's just basically, you know, a stock trade if you want a brokerage account with a long only, or in some cases, a leveraged long ETF that tracks this currency. I actually don't know what that is. We'll look it up and let you guys know on Tuesday. There's an ETF that just tracks this because it's such a ridiculous position. By the way, let this also be an example. I don't know how accurate this data is on these blue lines and the volume that is comprised, but if in fact it was accurate, you can see that we went completely to where there's missing notches. It's almost like we auctioned all the way down to an extreme out area. I'm pretty sure that this is absolutely blown up as a trade for those trying to go long this. And who knows, maybe there just wasn't a person out there that wanted to be long. So if there's not anybody to step in and buy, right? The chart can also look like the opposite of this too. But if there's not anybody here to step in and buy, what does price do? You know, what do the market makers do in that case for almost anything that actively trades, right? The answer is they keep dropping price until somebody's willing to step in and buy. That's the answer. So this happened during the flash crash too. You may recall this, but I mean, the orders just dried up. Now in that case, it's all done electronically, so price just kept going down and down until a buyer stepped in. But it went much, much faster than the electronic systems, which kind of malfunctioned, have ever had. It was like there was no triggers built in. There was no stops or pauses. And as we could see, I mean, just the pound just talk about off a cliff. So typically, if you're trading any software that has this, I should say, yeah, it's software too, I guess. But if you're trading any currency pairs that is anything related to, even with pin action, GBP, I think our move's in. So now what happens? Usually, there'll be a whole bunch of backing and filling, meaning that we're going to spend some time inside this range over a period of time. How long, how far, to what degree, how much volume, all that stuff, I have no idea. I can only go off of what typically happens when you have just an absolute exorcist type move. I think I just made up a new trading terminology. All right. So, you know, I'm not trying to make comedy this into this. It's probably some serious portfolios that blew up in currency land on this move. But oftentimes when you see a shooting star, right, that's not what this pattern is, but this type of really big move, it's usually it for a while. Now, whether that's the case or something much, much greater is going to happen, honestly, I haven't really read much up this morning on large institutions, you know, and how they sort of stand before this move or how they stand now. I'll get more color on that before Tuesday. Hopefully I can provide some insight on that. Got to make a couple calls, but this is crazy. I even joked, what was it, a couple weeks ago? Wouldn't that be cool if the pound got all the way down to $1 for dollar? I don't think I've ever seen it. I don't think it's ever happened. Right? What else? I could go on and on about all this, but, you know, honestly, guys, a lot of these other currencies, So, I mean, I'll take a look at GBP CAD. No surprise. I mean, the same thing happened here. I don't even know. Let's just go to a monthly chart and set that out. How's that? The answer is never. Be interested to see how NEO performed during this period of time if it was only short. We're testing these currencies going. And by the way, this is just it. Apologies to some that aren't going to like this statement, but this is just why I'm not a fan of martingale, right? I know the statistics. If you keep buying lower and lower, eventually it's going to bounce, and the stuff you purchased at the lowest amount will just have a huge bounce rate effect. But I always will say in that particular case, what if it doesn't, right? So Friday was an example of it didn't. So it would have just blown through all the positions, and all of the software would just keep digging you a deeper and deeper hole and eventually just blow out your account. If that happened to anybody, I apologize, but always come back to trading if you can afford it. Well, I keep losing and losing. Well, find the right mentor and be a sponge. And at some point, you'll stop losing money and start making tons. Stay away from stepping in front of the train of the prevailing current and riding the wave of that current, right? Gold. I said we're at the edge. Let's get out of this. Get back into daily. Oh, daily is really too much noise. Let's take a look at weekly. Here we go. All right, that's what I wanted to see. Notice I always try and put the entire picture in what's going on because it really helps with doing your own technical analysis. But for the first time ever, we blew through a long-term trend line in gold. This was the edge of the cliff, but I think this move's been exacerbated down here. I think at some point, if we can get down to this lower position, this range, this lower range, which we're almost in, by the way, starts right here. It goes all the way down to this area. So this 1450 to arguably 1650. So this whole $200 range per ounce. Be the next zone down. We can't stay in this. We're more than likely going to trade all the way down to see how this bottom support area. This is big support, by the way, real big, on a whole host of time frames. So this 1450 area. For those of you that, and I'm not talking about answering those ridiculous ads on TV about calling Lear Capital and Roslyn and all those gold places. Just pick yourself out a good ETF. You can use the GLD. You can use a GDX, which is more miner based. At some point, it would be a good position to bring in if we can get the 1450 on gold. It's way down there. Probably may never happen. If in fact it does, because pretty much anything can be the case these days. I'm always a fan of being an owner of something when the ashes settle out, right? The bonfire is done. It's smoldering. It's not going to come back. It can smolder for a while, right? That's trading down at the bottom of these levels for some time. And, that's kind of when I want to be an investor, to start sifting through the ashes. You don't put a lot of money in it. Maybe it's 3% of your portfolio, right? I'd be somewhere in that range, right? Doesn't seem like a lot. A lot of people are like, I'm not going to get rich off that. But you're getting in low. Can be a stalwart position in the portfolio down the road. And if it just goes back to where it was in a previous range, which it spent 2 years in, you're already up 30%, right? It's a great investment from a long-term perspective. Who knows? I could be completely wrong on this, but I prefer to be buying. Call me a value-oriented investor maybe these days. After the wreck takes place and I can sift through the ashes. Let's take a look at crypto and we'll call it a day. I'm off to the Oviedo, Florida German beer festival today. So I can put on more fat. In any case, Bitcoin really, really holding. I think this is one of those situations where, like, nobody wants to jump off the quarry wall, right? You're all looking at each other and you're like, hey, this is like 10 stories down. Yes, I used to do that as a kid. But nobody would jump. So once the first person jumps and everybody looks down and like, hey, he's not dead, they'll jump too. Some cases. Not much to say here, other than this 10,000 area all the way to 5 is going to be the landing pattern if we break through this. All right, so you guys got everything hopefully as far as a plan. The plan is to buy dollar only and sell everything else. Just kidding. I wish everybody a great trading week. Be safe. Always follow those that are smarter than you, and oftentimes that is not me. So I often joke I am not your guru. Everybody have a great trading week. Steve Vetterl.